I'd like to call the meeting to order at this time, and I'd like to, if I may, give just a brief overview of what you can expect. We've called the meeting to order. There will be an opening statement of the chair, opening statement of the ranking member, opening statement from Chairwoman Waters. Witnesses will be introduced. Witnesses will give their opening statements. Then we'll have Q&A of witnesses and adjournment. The title of today's hearing is Protecting Homeowners During the Pandemic, Oversight of Mortgage Servicers, Implementation of the CARES Act. Without objection, the chair is authorized to declare recess of the subcommittee at any time. Also, without objection, members of the committee who are not members of this subcommittee may participate in today's hearing for the purposes of making an opening statement and asking questions of witnesses. Members are reminded to keep their video function on at all times, even when they are not recognized by the chair. Members are also reminded that they are responsible for muting and unmuting themselves. I think this is something that's worthy of repeating because I've made the mistake of not honoring this responsibility. Hope that I don't make that mistake today. But members are also reminded that they are responsible for muting and unmuting themselves, and to mute themselves after they finished speaking. Consistent with the regulations accompanying HRes 965, staff will mute members and witnesses as appropriate only when they have not been recognized and to avoid inadvertent background noise. Members are reminded that all House rules relating to order and decorum apply to this remote hearing. The chair now recognizes himself for 4 minutes for an opening statement. Let me start by thanking the chairwoman of the full committee. It's always an honor to serve under your leadership, Madam Chair. I'd like to thank the ranking member for the participation that he has brought to this meeting. I'd like to also thank the staff for the hard work that you've done in obtaining some 4,000 pages of servicer documents. This would include policies, procedures, data on the largest 11 servicers. And there are findings that include the fact that over 2 million forbearance requests have been approved by these 11 servicers. And this was done between March 27th and June 30th of 2020. But we've also found some other things that are causing a bit of consternation. Often servicers fail to provide the borrowers with the 180-day forbearance that has been set in the CARES Act. And too often borrowers were given but 90 days. I have some evidence of this failure to comply that I shall share with you. This evidence is something that emanates from a request by a constituent. One of my constituents has brought to the attention of our office this document that is styled Temporary Hardship Forbearance Plan Agreement. I won't go through it in its entirety, but the important points are these: that this borrower faced a hardship and has had payments deferred for 3 of the payments that are due, 3 payments. And the amount due is going to be, in the final analysis at the end of the deferment period, the amount due for all payments within that deferment period and any late fees that may have accrued from other sources of payments not being made timely. The point is this, as it reads on this document: the amount due on the next payment due date, which was 3 months away from the date that the deferment period started, includes the amount of payments being deferred under the plan. Well, this is 90 days of deferments, not the anticipated 180 days that the CARES Act affords borrowers. In fact, many of the borrowers are not made aware of this. And we find, pursuant to some of the testimony that you'll hear today, that many of these borrowers who are accorded this 90-day period, as opposed to the 180 days, they are borrowers of color. It seems that this is, like many other things, having a disproportionate impact on persons of color, which causes me a good deal of consternation, I might add. I would also say this: this program that we established in Congress has been received by the persons who are charged with according these forbearance agreements, these servicers, it has been received by them as an honor system. We never intended for this to be an honor system that would allow them to decide whether or not they would accord persons the 180 days initially with the opportunity to extend for an additional 180 days. It was my intent that borrowers would acquire the 180 days and then they could opt to have an additional 180 days. The remedy, it seems to be that of having to file a lawsuit, litigation, have to go out and hire a lawyer, have to take this to court, have to have some period of time that might go beyond the period of time, quite frankly, that you anticipate having your forbearance. So I'm very much concerned about this. And my hope is that we can get a means by which we can deal with this honor system and bring this under the auspices of a situation such that they will have to comply as opposed to choose whether or not they will comply. With this having been said, it was my honor now to recognize the ranking member of the subcommittee for a 5-minute opening statement. Mr. Barr, as ranking member, you're now recognized for your 5-minute opening statement.
Thank you, Chairman Green. Good to see you and all of our colleagues and witnesses. Thank you again for joining us virtually for today's hearing. The coronavirus pandemic and the associated government-imposed shutdown of the economy disrupted the lives and livelihoods of citizens across our country. Businesses shut down, unemployment skyrocketed, workers who remain employed face uncertain prospects for their long-term stability, and families were at risk of losing their homes. As you all know, Congress passed and the President signed into law the CARES Act, which helped individuals and small businesses and created forbearance options for struggling homeowners. At the peak, approximately 4.7 million families were in forbearance. Many more families would undoubtedly have lost their homes or struggled to make payments if not for the swift and decisive response from Congress and the administration. The implementation of the Paycheck Protection Program, economic impact payments, the Federal Reserve's lending facilities under 13.3, which opened credit markets, and other assistance programs under the CARES Act made it easier for homeowners to pay their mortgages, families to stay in their homes, and small businesses to build a bridge to the other side of the crisis. Fortunately, we have seen the number of mortgages in forbearance decrease since the peak, declining a full 13% since May. However, we are not out of the woods yet. There are still millions of homeowners facing hardship and requiring additional assistance. I hope to learn from our witnesses today what may be helpful next steps as Congress contemplates additional legislation. The far-reaching aid to American homeowners was a collaborative effort between Congress, the administration, regulators, and the private sector. It's important to note that while the CARES Act mandates that servicers of federally backed mortgages offer forbearance options to borrowers, that same requirement is not in place for loans held in portfolio or in private label securities. Despite the absence of this mandate, however, servicers of these non-federally backed loans stepped up during this crisis and offered similar forbearance terms for their borrowers to those mandated under CARES. This shows that in times of crisis, the government and the private sector can work together, and that the private sector has acted responsibly in the interest of homeowners without having government mandates imposed on them. Unfortunately, my colleagues on the other side of the aisle believe that a top-down mandate on all servicers would be more effective. The Partisan Heroes Act included a mandate for automatic forbearance for all borrowers struggling to pay their mortgages. Not only does this mandate appear unnecessary given the market dynamics we've seen to date, but it actually has the potential to further disadvantage borrowers by limiting their options. On May 4th, Chairwoman Waters and Chairman Green sent letters to some of the largest mortgage servicers requesting information about their interaction with customers following the passage of the CARES Act. The implication of the letter was that mortgage servicers skirted their responsibilities under the CARES Act or somehow profited by steering their customers into forbearance when not in the best interest of the borrower. The data the majority received in response to their letter told a very different story and demonstrated that servicers are working well with borrowers in their times of greatest need. This is a hearing in search of a problem. Now, that is not to say that there weren't some hiccups along the way. There were understandable growing pains and bumps in the road as servicers staffed up call centers, updated websites, and implemented the necessary technology to help their customers. However, given the scope and scale of the forbearance requests and the short time frame to implement new processes, the servicers overall should be commended on their treatment of borrowers in a time of crisis. And I think the creditors, the mortgage creditors and the servicers, they've learned from experience that the expense of foreclosure and repossessing these properties is not in anyone's best interest. Keeping homeowners in their homes is in the best interest of all involved, particularly those struggling Americans who need help. I look forward to further exploring how servicers worked with their customers, the efficacy of the CARES Act provisions in keeping families in their homes, what additional actions may be required by Congress, and potential areas of improvement in the servicer-borrower relationship. And again, I thank all of you for being here today, and thank Chairman Green again and Chairwoman Waters for holding this hearing.
Mr. Chairman, I am so appreciative for your holding this hearing this morning. As I took my seat, I heard you read something where there appeared to be a demand from a servicer, from an institution that was a demand for what would be considered a full payment for the months that had been missed. Is that true, Mr. Chairman? May I make sure that I have the information correct? Is that true? I guess the chairman is not hearing me. Am I unmuted? Can you hear me? Hello?
We can hear you, but he's muted.
I'm unmuted now, I believe. Can you hear me?
Now I can hear you. I just
Okay.
wanted to make sure that what I heard you saying was that someone had been demanded to pay the full amount of the missed payments that was about 4 months due. Is that correct?
3 months, 3 months of forbearance, yes, ma'am, and it would be payable upon the end of the 3-month period.
Thank you very much. I wanted to make sure that I had the information correct. Mr. Chairman and members, that's precisely what we want to avoid. As a matter of fact, I have to say to Mr. Barr, the experience that we had starting in 2004 with the foreclosures that took place, with the exotic products that were placed on the market, with all of what caused us to experience disaster in our communities because of these unprecedented foreclosures, leads us to understand what we must do to avoid homeowners losing their homes. And so I understand that my time is up, but Mr. Chairman, I want to thank you for the hearing, and I am absolutely committed to the proposition that this will not happen, that we are going to have a credible forbearance situation for our homeowners that will not cause them to lose their homes. I yield back the balance of my time.
The chairwoman yields back. At this time, I'd like to introduce our witnesses and thank them for coming and being a part of this hearing. We have with us today Alys Cohen, who is a staff attorney for the National Consumer Law Center. Marcia Griffin, founder and president of HomeFree-USA. Donnell Williams, president, National Association of Real Estate Brokers. And Ed DeMarco, president, Housing Policy Council. Welcome again. Thank you for being with us virtually. And the witnesses will be recognized for 5 minutes to give each an oral presentation, if you would. A chime will go off at the end of your time, and I will ask that you respect the members and other witnesses' time by wrapping up your oral testimony. Without objection, the witnesses' written statements will be made a part of the record. Once the witnesses finish their testimony, each member will have 5 minutes to ask questions. With that, Ms. Cohen, you are now recognized for 5 minutes for your opening statement.
Thank you very much, Chairman Green, Ranking Member Barr, and members of the subcommittee. Thank you for the opportunity to testify today. I testify on behalf of the low-income clients of the National Consumer Law Center, as well as 20 other consumer legal services and civil rights organizations. The unprecedented coronavirus pandemic has brought illness, death, unemployment, and greater economic insecurity to people across the country. Communities of color, particularly Black and Latinx people, have been especially hard hit. Pre-existing inequalities are exacerbated by the current crisis, and Black and Latinx homeownership is imperiled. To mitigate some of the harm wrought by the pandemic, Congress must continue its vigilance in protecting homeowners, improve transparency for housing relief programs, increase its efforts to regulate and reform the mortgage servicing industry, and center relief for Black and Latinx homeowners. The federal regulators must act as well to prevent avoidable foreclosures and promote sustainable homeownership. Congress must pursue dedicated efforts to protect and expand Black and Latinx homeownership and pass additional measures, including collection of loan-level borrower, loan performance, and loss mitigation data with free public reporting. Representative Porter's bill, H.R. 6835, is a good start on this. Expansion of CARES Act protections must include standardized forbearance for all mortgages, automatic forbearance for borrowers who have missed 2 payments or more, affordable repayment options for borrowers exiting forbearance plans or seeking to resolve delinquencies that are available prior to foreclosure, written notice and in-language information for limited English proficient borrowers, a moratorium on negative credit reporting, targeted support for the hardest hit communities, including funding for legal services, housing counseling, and cash assistance for delinquent borrowers, and measures to prevent neighborhood blight. Moreover, federal regulators must increase oversight, ensure mortgage assistance meets the needs of diverse communities of homeowners, improve regulations, including recent CFPB rules that leave homeowners at risk, and consider future reforms in the mortgage servicing industry to align servicer incentives with those of homeowners and investors. We commend the regulatory extensions of the foreclosure moratoria, FHA's recent announcements to expand loss mitigation options, and GSE expansion of post-forbearance options, and more is needed. Black and Latinx homeowners are more likely now than white homeowners to struggle paying their mortgage, seek assistance from their servicer, and miss payments instead of receive forbearance. While all homeowners are more likely to report missing payments rather than deferring payments with their servicer. In the Census Bureau's Household Pulse survey at the end of June, 4 times as many Black homeowners reported missing payments as compared to deferring payments. Among Hispanic or Latino homeowners and homeowners who identified as other or reported 2 or more races, they were 2 times as many homeowners reporting that they had missed payments as compared to deferring. Only about 1.4 times as many white homeowners report missing rather than deferring payments. How can we help homeowners who have not yet received assistance? And what can we do for the disproportionately large group of borrowers of color facing this challenge? While we focus today on efforts to contain the fallout from the pandemic, we should not lose sight of the fact that for many distressed borrowers, the mortgage servicing industry remains fundamentally broken. Our ability to prevent another great loss of homeownership for Black and Latinx families depends on our ability to have servicers see that performing default servicing well is in their interests, as well as the interests of financially distressed homeowners and their communities and the economy. Our nation is facing unprecedented challenges that present us with a real chance to look at our priorities and assumptions and make material progress in how we measure success and inclusion. Thank you.
Thank you for your testimony, Ms. Cohen. Ms. Griffin, you're now recognized for 5 minutes for an opening statement.
Thank you very much. My name is Marcia Griffin, and I am president and founder of HomeFree-USA, a nationwide HUD-approved housing counseling organization. I appreciate this opportunity to appear before you to provide firsthand insight surrounding the plight of homeowners in this pandemic. Allow me to emphasize the importance of housing counseling organizations, which I like to call nonprofit homeownership providers. HUD-approved housing counseling organizations like HomeFree-USA are mission-based entities created to provide everyday people with the tools they need to achieve and sustain their housing and homeownership goals. We help renters to become sustainable homeowners and help existing homeowners avoid mortgage delinquency and foreclosure. We're somewhat like marriage counselors. When a homeowner has unanswered questions, needs credit help, doesn't know what to do, doesn't understand the servicer jargon, we bring them together with lenders and servicers to ensure that everyone is on the same page with the goal, of course, of finding a mortgage solution that works for both parties. According to the U.S. Congress Joint Economic Committee, the average foreclosure costs everyone $77,934. Lenders lose an average of between 12 and 19% of the home's value in foreclosure, and they spend about $50,000 in the process. If counselors are able to prevent foreclosure, the value to lenders, investors, and the country is enormous. So what are we seeing in the market today? Calls come in daily from homeowners who are exhausted, paralyzed by fear, COVID sick, and have lost their job. Everyone is concerned that they will lose their home. First, in my work at HomeFree-USA and with my colleagues at the National Housing Resource Center, we do believe that servicers have improved since the start of the pandemic. But many still need better trained customer-facing employees. Some call center employees read scripts that they are not familiar with, don't have time to answer questions, and are just not familiar enough with the process or procedures to assist consumers. Second, counselors assist homeowners who are improperly denied a forbearance. We have seen a troubling concentration of this issue with veteran loans. We're also seeing homeowners who may have recently completed a loan application, they've also been denied, or borrowers who have just missed a payment in March or February, they've also been denied. Furthermore, we help homeowners who have requested a forbearance but still have questions about whether it has been approved and how to plan ahead for repayment. There is a frustratingly large number of homeowners who are unemployed but are still being told that lump sum payments are due at the end of the forbearance. Other occurring issues are highlighted in my written testimony. Whether right or wrong, too many of our clients are unfamiliar with the terms in the servicer scripts. This only compounds the existing sense of distrust and fear of the banking industry. People of color are particularly vulnerable to this sense of distrust of lenders and servicers as a result of their most recent experience in the last housing crisis. People of color rely heavily on organizations like HomeFree-USA to advocate for them. What can be done? First, servicers do not have the capacity to handle individualized support of vulnerable homeowners. It is essential that housing counselors are supported so that we do not have to turn away a single consumer, thus freeing up services because we can handle the most challenging cases. Second, we feel that CFPB, FHFA, and HUD should be more solution focused and proactive in their monitoring of repayment issues. We feel the federal agencies should coordinate and should identify real-time solutions and actively update policies and procedures. Third, we need a streamlined loss mitigation loan procedure like we had with hemp. The biggest problem we have will be homeowners who return to work but have significantly reduced incomes. There would be a need for aggressive and affordable loan modifications for these borrowers. Housing counselors are capable of helping homeowners and servicers through these complicating processes. Last, more outreach is needed. Consumer awareness of options and processes need to be better distributed. I very much appreciate this opportunity to illuminate our concerns about COVID-related mortgage servicing, the importance of housing counseling intervention, and to sound the alarm that the worst is yet to come. HUD-approved counseling organizations can play a huge role.
The lady
with
will have to wrap up her testimony, please.
Okay,
You've exceeded your time.
okay, thank you.
All right. Thank you for your testimony. Ms. Williams is now recognized for 5 minutes for an opening statement. Mr. Williams. Mr. Williams, you may have to unmute.
I apologize.
That's quite all right. Continue, please.
Chairman Green, Ranking Member Barr, Chairwoman Waters, and distinguished members of the committee, thank you for the opportunity to testify today and to discuss the importance of protecting homeowners, especially during these difficult times. I also want to thank Chairwoman Maxine Waters for calling this hearing. My name is Donnell Williams. I serve as the president of the National Association of Real Estate Brokers, the country's oldest and largest Black real estate trade association. Founded in 1947, our mission, democracy in housing, has guided our efforts to ensure fair housing practices in neighborhoods across the country, especially in communities of color. I am also the owner of Destiny Realty, a brokerage firm headquartered in Morristown, New Jersey. COVID-19 is disproportionately affecting Black homeowners. It is well documented that COVID-19 pandemic has had a crushing and devastating effect on Black homeowners and caused mass unemployment, putting a deep economic strain on many Black borrowers who have worked hard to achieve the American dream of homeownership. As of mid-June 2020, roughly 24% of Black homeowners reported some difficulty making their mortgage payments compared to white homeowners. There is a 13% gap between Black homeowners and white homeowners receiving forbearance under Section 4022 of the CARES Act, which allows borrowers to apply for a forbearance period of up to 360 days. Solutions. In order to address the challenges facing Black homeowners as a result of the pandemic, it is imperative that Congress take action to ensure the congressional and governmental efforts to maintain homeownership are equitable and include Black homeowners. We urge Congress to take the following actions. 1, allocate specific funds targeted to the preservation of Black homeownership. 2, provide assistance for mortgage borrowers not covered by the CARES Act. Private mortgage lenders must be required to offer government-supported forbearance to their borrowers, comparable to the treatment of government-supported mortgage loans. Number 3, require FHA and all servicers to notify borrowers in all communications, including mail, electronic communication, and phone calls, of their rights to apply for forbearance. Require all servicers to have dedicated toll-free lines, staffed with representatives who are knowledgeable about their forbearance procedures. Number 4, create a large-scale public awareness initiative. Federal government is allocating resources toward building public awareness around the health risks associated with COVID-19. Similar efforts should be made to inform borrowers of their rights. Number 5, ensure FHA borrowers and GSE borrowers continue to have the same access to mortgage forbearance protections, financial relief, and assistance. In conclusion, the National Association of Real Estate Brokers, whose members are known as Realtists, since its inception has stood for democracy in housing, and we are the guardians of the communities we serve. We will continue to advocate for the preservation and sustainability of homeownership for Black Americans and all Americans. The Realtors organization are the trusted advisors of our community and the conscience of the real estate industry. And want Congress to align NAREB's declaration of a cease and desist on the decline of Black homeownership. Thank you for the opportunity to testify before the committee today, and I will be glad to answer any questions. Thank you.
Thank you very much for your testimony, Mr. Williams. Mr. DeMarco, you are now recognized for 5 minutes for your opening statement.
Very good. Chairman Green, Ranking Member Barr, Chairwoman Waters, and members of the subcommittee. Thank you for inviting me to testify on how mortgage servicers are responding to the challenges facing homeowners because of the novel coronavirus. Many homeowners are in deep economic distress resulting directly or indirectly from the pandemic. Also, while anyone is vulnerable to the virus, the health and economic costs have disproportionately affected communities of color and lower income households. From the outset of this emergency, Housing Policy Council members and other mortgage servicers have been committed to keeping individual borrowers and families in their homes. My written statement covers 4 topics, which I will briefly summarize here. First, the challenges facing homeowners today are not the result of poor underwriting standards or inappropriate business practices. This pandemic is a national health crisis, and the steps taken to combat it have had enormous economic consequences. In response, HPC members and other mortgage servicers have shifted virtually all of their operations out of call centers and office buildings to their own homes. They've trained their staffs remotely and modified technology to manage the enormous inflow of borrower inquiries. They've set up automated online tools for borrowers to educate themselves and request payment relief. They began offering homeowners forbearance options before the passage of the CARES Act. And they've extended forbearance to homeowners that do not have federally backed mortgages. And they've executed against an evolving series of program and regulatory announcements from various federal programs and agencies. By late May, just 2 months since enactment of the CARES Act, nearly 4.8 million households were on a forbearance plan. That total has declined 13% since then. According to Black Knight Financial Services, by late May, 12.3% of FHA and VA loans were in forbearance, and 7.1% of GSE loans were in forbearance. Servicers of these loans are required by the CARES Act to offer forbearance to a customer who asks for it, claiming a COVID-19 economic hardship. Yet for non-federally backed mortgages, 9.6% of such loans were also in forbearance by late May. These include bank portfolio loans and loans in private label securities. This is a clear indication that bank portfolio lenders and other investors have also responded without a federal directive, providing borrower payment relief at an even greater rate than we see for GSE loans. Second, I want to acknowledge the partnerships and information sharing that has marked the last 4 months. Not only has industry been trying to work together to develop best practices, we have been joined in partnerships with numerous other organizations and stakeholders, as well as numerous government agencies and regulators. These partnerships demonstrate a level of common concern for the families whose financial situations have been disrupted by this national health emergency. I believe it is because of this communication and coordination that relief has been provided to so many so quickly. Third, transitioning from forbearance to a longer-term solution requires dedicated effort from the borrower and servicer to ensure the best resolution. The sooner a borrower begins repaying their mortgage, the sooner he or she resumes the wealth-building opportunity that homeownership provides. When a borrower is ready to resume monthly payments, borrower contact with their servicer is critical to achieve a seamless transition and to ensure there's certainty among all the parties regarding the repayment of the forborne amounts. The options available are dependent on several factors, some unique to the loan program and some based on the borrower's own circumstances. Generally, the options include a short-term repayment plan, repayment at the end of the loan term, or longer-term repayment by adding the outstanding payments into the loan balance and modifying the loan. With the forbearance provisions of the CARES Act, Congress has already taken the cornerstone action to assist borrowers and servicers. We recognize that the pandemic has negatively affected many consumers and communities, and that some of the beneficial stimulus provided under the CARES Act is coming to an end. Thus, we support additional measures by the Congress to provide fiscal stimulus to hard-hit consumers and communities. Thank you for inviting me to participate today.
Thank you for your testimony, Mr. DeMarco. I now recognize the gentlewoman from California, the chair of the full committee, for 5 minutes for questions.
Thank you very much, Chairman Green. And I'd like to thank all of our witnesses who are here today. I know of their work. I've worked with them over the years as they have been counseling and helping our homeowners. And I'm very, very pleased that they're all here this morning. But here's what I would like to do. I'd like to find out, and I'll ask each of our witnesses in the time that I have, whether or not the language in the HEROES Act is doing exactly what we need it to do. We know that we're provided the right to request and receive forbearance for our homeowners on their mortgage payments for up to 6 months, with the option to extend for an additional 6 months. That's a total maximum of a year. I think there was some information shared with us about the fact that homeowners don't necessarily know this. What can we do to make sure that they get this information? And I'd also like to know, should there be additional language about loan modifications even following the 1 year period of time for forbearance? So let me ask each of our witnesses to share with me whether or not they think that is sufficient. Let me start with Marcia Griffin, who I've worked with for so many years. Thank you, Marcia.
Wonderful, thank you. Housing counseling organizations definitely support the HEROES Act. This is great progress. It also really helps to sort of rein in some of the issues that we're seeing with private non-federal loans. We are very, very appreciative of the suggestion of support, supplemental support for housing counseling. It is very, very much needed. You know, the focus on repayments and forbearances, it's good, and we should certainly continue. We have spoken about our views on the HEROES Act also in our written testimony. So we just applaud
I
that.
want to make sure I get to the other two witnesses. National Consumer Law Center staff attorney, Ms. Cohen, do you think that we need additional information on following the 1 year forbearance?
Thank you for your question, Chairwoman Waters, and for being at the hearing today. Your question sounds like it's focusing primarily on this question of whether people need more than 1 year of forbearance.
Yes.
First of all, the HEROES Act has a lot of excellent provisions in it, and we hope to see the Senate take up something like that, look at those issues, and find a way to get something done. With regard to your specific question, as you heard Dr. DeMarco say not a long time ago, people need to transition from forbearance to repayment. And so what we'd like to see is legislation and programming to help people get into repayment. Now, of course, if the financial situation in the country goes on in an unexpected way, we may need to reevaluate that. But at this point, what we'd like to see and what's in the HEROES Act and could be in Senate legislation is more affordable post-forbearance repayment options that are mandatory.
Very good. I think we're talking about the same thing when you talk about repayment options after the foreclosure, after the forbearance period. Let me ask Donnell Williams, President, National Association of Real Estate Brokers. I work with the realtors, just with Consolidated in LA. I appreciate your work so much. What do you think? You've given us some advice, and you've pointed out a few things that you think we can do additionally. Of those 4 or 5 things that you pointed out, which stands out most in your mind that we should do to make sure that this forbearance and loan modification process works?
I think that they need to have information, the services need to get the information out of the borrower's rights out to the community and to the borrower. That can be done by mail. We're not getting this information or trusting this information any other kind of way. If it doesn't come through the realtors organization, and if it does come through their mail, that would be great, through email and what have you. We also need to have data collection. But servicers need to supply this information, this data, to the CFPB and to Congress. I just had a borrower in Irvington, New Jersey, another one in Morris Township, New Jersey, tell me that their servicers, like Congressman Green, say that they only gave them 3 months and that the whole balance would be due in 90 days.
Well, let me stop you at this point. Do you think we should have some penalties for servicers who violate the law that we have in the HEROES Act and would require lump sum payments like that?
I do believe so, because they're roadblocking, they're stopping, they're clogging it up so that we can't have progress.
Well, I thank you for your testimony here today, and thank you, Mr. Green. I yield back the balance of my time.
The gentle lady yields back. The ranking member, Mr. Barr, is recognized for 5 minutes for questions.
Thank you, Mr. Chairman, and thank you to all of our witnesses for your testimony. Obviously, very powerful testimony about the vulnerability of homeowners at this time. And if I may just offer one comment or observation about the testimony of all of our witnesses, it just speaks to the very important need for us to avoid any future shutdowns of the economy. Of course, we need to practice hygiene and mask wearing and all of the things to prevent the spread of the virus. But particularly for minority borrowers, based on the testimony that so many have offered here today, it just speaks to the importance of getting people back to work so that they can provide for their families and meet those payment obligations. Let me start with a question for Dr. DeMarco about the non-federally backed mortgages, and I think your testimony was that for those non-government backed mortgages, those mortgages actually, those borrowers are actually experiencing a higher forbearance rate than federally backed mortgages. Dr. DeMarco, what does that tell you about the marketplace and how the marketplace is responding without the HEROES Act?
I think it's telling us a couple things. I think it's telling us that what was in the CARES Act, the forbearance provisions in the CARES Act that have been implemented for federally backed mortgages, is a sound approach to dealing with this kind of situation, and that servicers that are not required under the CARES Act to provide this support are still utilizing those same tools to assist their customers in non-federally backed mortgages. So I think that servicers recognize in this situation that payment forbearance is an appropriate response to assist their borrowers. And in fact, they are doing that whether required by the CARES Act or not. And so this is really developed as a best practice. It is being utilized by servicers of non-federally backed mortgages very effectively. And as you noted, and as I noted, at a greater rate than in fact we see in the GSE loan.
The HEROES Act, which, as you know, passed without any Republican support, contains some new parameters around options for homeowners experiencing difficulties. But apparently, the authors of the HEROES Act believe that instituting mandatory automatic forbearance for all borrowers and limiting loan modification options would benefit borrowers. Dr. DeMarco, how would these proposed sections of the HEROES Act impact a servicer's ability to work with their customer? And would they actually help or hurt American families trying to stay in their homes? And in the context of answering that question, could you talk about the importance of communication between servicers and borrowers?
All right, well, that's actually where I was going to start. I think that the idea, I understand the intention behind wanting to create an automatic forbearance opportunity for borrowers. But there's actually, I suggest, something more important here that actually comes out of the work that Congress did in the Dodd-Frank Act and then has been implemented since by the CFPB, but it was also part of the development servicer practice as a result of the Great Recession. That is the importance of timely communication between a servicer and their customer if the customer is having problems paying their mortgage. So we don't want to wait 60 days and say, oh, well, we haven't had a check come in, we'll put them on forbearance. servicers have to be, should be, and want to be in contact with their customer before you get to 60 days and want to understand what is the customer's situation so that they can, in a timely way, deliver an appropriate support or opportunity to help get that homeowner back on their feet. So, for example, the homeowner may have missed 2 months of payment for reasons having nothing to do with an economic disruption due to the pandemic, but for some other reason. And so the servicer wants to get in touch with that homeowner, find that reason, and get to solving that homeowner's particular problem. So that's why we would suggest that the idea of making sure the servicer is actually staying in contact with their customer and the customer staying in contact with the servicer is going to yield a better outcome for the very situations that we're going to see here.
My time is almost expired, but I think it's important to recognize that different homeowners face different difficulties, and a one-size-fits-all may not be better. If we can get folks into repayment quicker, we should do that. And finally, you know, no matter what we did in the CARES Act or how much forbearance requirements or forbearance is allowed in these cases, nothing can replace getting people back to work and getting kids back in school so people can take care of their mortgage obligations. So thanks so much, and I yield back.
Gentleman's time has expired. The chair now recognizes the chairwoman, Chairwoman Beatty, of the Subcommittee on Diversity and Inclusion. You're recognized for 5 minutes for questions.
Thank you so much. Can you hear me, Chairman Green?
I can.
Okay, thank you. It is certainly my honor to be on this committee, and thank you, and certainly our chairwoman of the Financial Services Committee, Congresswoman Waters, and to our ranking member. First, let me say to all the witnesses, thank you for your time and for your testimony. My first question, I'm going to try to get through several questions, so if I kind of put my hand up or move on, please excuse that. It's just because of the timer. The question is for you, Ms. Cohen. As you know, the CARES Act is very explicit about the protections Congress intended for homeowners with regards to forbearance. Borrowers experiencing financial hardship due to COVID-19 were to be provided forbearance for 180 days with the possibility of an extension for another 180 days. Despite this, you know, I've gotten calls, dozens of calls, and they're confused about what the law said and what my constituents as mortgage servicers were offering in that way. As you know, we passed the CARES on March the 27th. Can you tell me, despite the confusion going on in the marketplace that we all knew about, and that where was the CFPB who has oversight of the mortgage services industry, and why did it take us into June 4th?
Thank you for your question. Well, in terms of the complaints that you're hearing, we do have some good protections in the CARES Act, and the federal regulators really need to step up their game and do much greater oversight of the servicers. In terms of the CFPB, they appear to have spent most of their time relaxing regulations for servicers and providing advice for homeowners.
Okay,
What
so
homeowners need are protections.
do you think they should have been doing more? I mean, I get the relaxing part, but people are still hurting and they have oversight. Yes or no?
Yes, the CFPB should do more, starting with making sure people don't face foreclosure until they get help.
Thank you. Let me move on to the next question. Mr. DeMarco, this question is for you. Earlier in the week, and maybe you've seen this article, ProPublica published a story entitled "Trump Financial Regulator Quietly Shelved Discrimination Probes into Bank of America and other lenders," which found that the Office of Comptroller of the Currency halted or stalled at least 6 investigations into discriminatory mortgage redlining against the recommendations of their own career staff. This was the same time in the same agency that was working to undermine and water down the CRA Act, which was supposed to protect against the type of discriminatory lending. In this article, they found out that OCC had found patterns of discriminatory lending against African Americans and Latinos in several lending institutions in several areas around the country. It also listed a whole lot of other things that were shelved. Mr. DeMarco, many of the lending institutions identified in the articles are members of the association you lead. Can you tell me your response to this? And what are you doing to ensure that members of your organization are not perpetuating the social and economic injustices that African Americans and other minorities continue to face? This is very troublesome to me.
Certainly, and I would understand that, Ms. Beatty. Forgive me, I am not aware of this article. I have not read it or seen it, so I'm at a disadvantage there. But I will take what you said and say, well, look, I mean, I certainly I would be concerned about those sort of issues. I'm sure if any of my member companies are named in that article, that they are looking at what is going on here. And so I would be happy to go and take a
And
look.
thank you so much. Let me go to the chairman. Mr. Chairman, I would like to request that the committee uses its powers and resources, if necessary, to subpoena documents from the OCC related to previous lending discrimination investigations and seek depositions of senior leaders of the OCC, including the director himself, Joseph Otting, to get to the bottom of these allegations. We've been hearing them, it's been talked about, and I'm sorry Mr. DeMarco is not familiar with the article. I will have my staff also send that. And my time is up, I yield back.
Your request is duly noted and will be acted on in the due course of events. The chair now recognizes next the gentleman, Mr. Zeldin, for questions for 5 minutes.
Thank you, Mr. Chairman. Can you hear me?
I can.
Okay, well, I thank you first to all the witnesses who are here. Appreciate your testimony today. Thank you to Chairman Green and to Ranking Member Barr and Chairwoman Waters as well. Appreciate all of you holding this hearing. I have the honor and privilege of representing the 1st Congressional District of New York, which covers most of Suffolk County. Suffolk County is one of the most expensive places to live in the country, so affordable mortgage options are essential to my constituents. We're here today to discuss mortgage servicers who play a client-facing role in mortgage finance. On April 10th, I spearheaded a letter to Secretary Mnuchin with 19 other members of this committee. The letter highlighted the need to ensure adequate liquidity for mortgage servicing because residential mortgage servicers are typically obligated to advance payments of principal, interest, taxes, and insurance onto investors, municipalities, and insurers, whether the borrowers make those payments or not. If a homeowner falls behind on payments, it's the servicer's role to work with the borrower and find ways to get them back on track through loan modifications. In the CARES Act, Congress decided that a nationwide broad-scale forbearance program was needed, but it was important that steps were taken to buoy the market if forbearance take-up rates continue to skyrocket. Mortgage servicers have a vital role to play in helping borrowers, but cannot shoulder the entire onus of government actions to protect American homeowners impacted by COVID-19 if they do not have access to needed liquidity to execute on those government actions. I'm pleased that federal agencies have focused on this and continue to work with servicers on how best to serve homeowners. FHFA and HUD issued guidance and scripts to be distributed to mortgage servicers. These step-by-step instructions have helped guide servicer discussions with borrowers. Additionally, the GSEs and Ginnie Mae have provided assistance to servicers dealing with loans in forbearance. Meanwhile, the New York Attorney General on April 24th called for mortgage servicers to, quote, automatically waive late fees and place homeowners in a 3-month forbearance as soon as a payment is missed, whether or not this action is requested by the homeowner. Dr. DeMarco, my question first for you, should borrowers be automatically enrolled in forbearance, or is it better for the borrower to speak with his or her servicer first regarding the best options for his or her situation?
I think it is definitely better for the borrower to speak with their servicer as soon as they have any issues with making a mortgage payment, explain what those issues are to the servicer, so the servicer may work with the borrower to determine what is the appropriate course and the best course for that particular borrower's circumstances.
May I respond to that?
Please.
Because the subject came up twice, I'll do it quickly. We agree that people should try to talk to their servicers, but as I stated before, more borrowers are not paying their mortgages than are making forbearance arrangements with their servicers, according to the US Census Bureau. People who are already late on their mortgages have taken the hit on their credit, and they shouldn't face foreclosure and they should get more assistance. Thank you.
Thank you. Dr. DeMarco, forbearance take-up rates seem to have leveled off for now. What is your assessment of the servicer liquidity situation?
I think that as a result of the administrative actions that you mentioned, particularly by FHFA and HUD, as well as some actions by the Federal Reserve in the mortgage-backed securities market, the liquidity situation has stabilized. And the interesting thing here is by the regulatory actions that put guardrails around or limits around the servicer's liquidity responsibility on any given loan actually enabled the private market to step in and provide additional liquidity. Once we had greater certainty about what the rules of the road were going to look like in terms of advances and what the duration was going to look like, the markets actually stepped in. We still believe that and that the Fed and the Treasury, can and should be ready to step in as needed if the situation turns worse again and liquidity is needed for non-bank services.
Thank you. My time is running out. I just want to thank again all the witnesses for being here, to Chairwoman Waters, Chairman Green, Ranking Member Barr. It's great to see all of my colleagues here. Look forward to seeing you in person. Hope you and your families are healthy. And to all the staff on the call, thank you for what you do to make this hearing possible and for your service to the financial services community. I yield back.
Gentleman's time has expired. The chair now recognizes the chair of the Task Force on Financial Technology, Mr. Lynch, for 5 minutes for questions.
Thank you very much. I appreciate you holding this hearing, Mr. Chairman. I guess I'd like to look further out in terms of in January or when we hopefully when we start to come out of this the lockdown, especially in the southern states. What does the transition look like in terms of recognizing the inability, recognizing the tremendous pressure that has been put on individual homeowners and banks, local community banks? What does that transition look like in terms of trying to slowly, incrementally get us back to where there's full opportunity for people to catch up on their mortgage payments, in some cases re-engineering some of the mortgage products that are out there, or reconstituting the mortgages that are on property that are inadvertently falling behind. How does that all come together? And is it the mortgage servicer, or is it, obviously the mortgage servicer has obligations to the shareholders. So I'm a little bit unclear on how we can re-engineer this in a way that doesn't put the homeowner or the renter, in some cases, at severe risk. Let's say the president pulls off the emergency status and by executive order might end all the support and relief that we've been providing. What does that look like, and how do we help those people transition slowly back to some semblance of normalcy?
I would be glad to take a crack at that, Congressman. With 4.8 million households in forbearance, you can imagine that not everyone's going to come out of forbearance in the same situation.
Right.
Over the last few months, I think between FHFA, the GSEs, FHA, and I don't want to leave out VA and USDA, there's been a lot of development about refining for servicers the guidelines of these programs for what that post-forbearance looks like. But I think across all of them, it can be simply boiled down into, broadly speaking, 3 buckets. For a borrower that comes out of forbearance and actually has the capacity not just to continue to pick up their mortgage payment, but to make a greater payment, they may determine they want to be on a short-term repayment plan and get caught up faster. For a lot of borrowers, if they get back to work, they can resume their pre-pandemic mortgage payment, but can't pay more than that. In that case, for most of those borrowers, their forborne payment's going to get added to the end of the loan, of a life of the loan, to be paid then, and they resume the normal payment. But for those whose income has been permanently disrupted, they can't go back to their prior payment. We're going to be able to do a loan modification where we get a way of getting them caught back up by redoing the loan using loan modification terms. That's it briefly.
Okay, so you don't anticipate any objection on the part of some of the shareholders of the, that are due payments through the, from the mortgage services. You don't expect any action that we would have to take in order to make that happen. It's already in place.
Well, certainly
I'd like
with
to take
federal.
that.
Okay, Alys?
Ed, I'm happy to have you answer, when I'm done, just briefly. Well, what we saw in the last crisis and what we continue to see is that, as you said, Mr. Lynch, servicers on private mortgages are beholden to the guidelines from the investors. And so what we'd like to see is a safe harbor for mortgage servicers from investor liability so that they can provide loan modifications along the lines that the GSEs and FHA and the other government agencies can provide that are sustainable. I would add that these issues are unprecedented, and we don't yet know whether the loan modifications being offered will be affordable to enough people.
Okay, that's a perfect answer. That's what I wanted to know. In case we need to create a safe harbor to allow the loan servicers to give a break to some of these mortgage holders, we need to collaborate on that. I think that would be that would be a win-win all the way around. But thank you very much, and I yield back.
The gentleman yields back, and the chair now recognizes the gentleman, Mr. Rose, for 5 minutes for questions.
Thank you, Chairman Green and Ranking Member Barr, and thank you to our witnesses for testifying before the committee today. Currently, as we know, approximately 4.1 million homeowners are in forbearance plans, some due to the uncertainty surrounding COVID-19. Reports have shown that a large number, however, have continued to make payments even after requesting forbearance. That number has dropped sharply between March and June, though. Back here in Tennessee, folks are ready to get back to work, and I believe we need to do so as quickly and safely as possible. Dr. DeMarco, why did some people opt into forbearance but continue to pay down their principal, in your opinion?
Congressman, I'm not sure there's one explanation for that. In some cases, it might have been a timing issue. They weren't sure when it, whether they got the request in time for that first month. Other cases, I believe, and this may be the majority, that the consumer wasn't exactly sure what their economic situation was going to be. Maybe they had a lot of uncertainty at work and they wanted to get on forbearance quickly so that they had that. And then once they realized that, in fact, their circumstances were okay, they may have ended the forbearance, or others, may actually have needed it and have started to take advantage of it since. So I think there's multiple reasons here.
Are there any adverse consequences to asking for forbearance and being approved, but then not taking advantage of it?
If one has you're supposed to, this is what the CARES Act says, have an economic hardship resulting from the pandemic in order to ask for the forbearance. But if you ask for forbearance and continue to make your mortgage payment, no, there's no adverse consequence for you.
Do you believe that getting Americans safely back to work?
Excuse me.
I'm sorry? Do you believe, Dr. DeMarco, that getting Americans safely back to work would decrease the number of borrowers who actually need to be in forbearance?
Well, certainly, Congressman, the more people we get back to work, the more they're going to be able to pay their mortgage and the fewer are going to need forbearance, yes.
The CARES Act required unconditional forbearances for homeowners experiencing trouble due to the pandemic. Those provisions only covered, however, federally backed loans. Dr. DeMarco, how have the private mortgage servicers changed their practices to help keep families in their homes?
They are generally doing the same thing as the servicers of federally backed mortgages. They're offering mortgage payment forbearance to their customers who contact them and declare they're having a financial hardship due to the pandemic. As a result, those loans are in for the rate of those loans in forbearance is actually greater than for GSE loans.
Interesting.
Well,
What other
Mr.
efforts?
Rose,
Yes.
one thing I wanted to point out is that most private servicers, if they have an investor that they're servicing for, they're advancing payments. And so at about 120 days of forbearance, they're, much more financially strapped. And we're concerned that 90-day forbearances aren't going to go to 180 days in the private market, and that's going to present a significant problem.
Thank you, Ms. Cohen.
And Mr. Rose, excuse me, the National Association of Real Estate Brokers, in our statement, we had addressed that as one of our 5 solutions that private servicers need to adhere to the GSE and FHA guidelines, FBB guidelines.
Thank you.
I'd also
Dr.
like to,
DeMarco,
I'd also like to add,
let me
if
go
I
ahead.
might just add this
Some
comment.
other questions,
Sorry.
reclaim my time. Dr. DeMarco, what other efforts have you seen industry stakeholders make to protect homeowners?
I think that they've done a great deal to set up on their websites clear information for borrowers to understand what their options are. They've made a tremendous effort to shift all their servicing operations to the individual's homes and had to do the technology and the security around that to make that happen. I think those have been terrific efforts that servicers have made. And the other is they're proactively reaching out to their customers to find out what their situation is and to make sure that they're getting the right tools to help them in their situation.
Thank you. Throughout the pandemic, I believe the Trump administration has continuously rolled out updated guidance for industry stakeholders. Dr. DeMarco, in the few seconds we have, well, it doesn't look like we have enough time, but I would, if time permits later, love to hear how your assessment of how the agencies have assisted with the implementation of the CARES Act. And with that, I yield back to Chairman Green.
The gentleman's time has expired. The chair will recognize next Ms. Velasquez, the chair of the full Small Business Committee, for 5 minutes for questions.
Thank you, Chairman Green and Chair Waters and the ranking member for this important hearing, quite timely hearing. This question is for the panel. Recently, companies and organizations like the Center for Responsible Lending, the National Association of Realtors, and Quick Loans have all come out in opposition to the Trump administration plan to weaken the disparate impact rule, thereby making it harder to pursue housing discrimination cases. Several other groups have come out in opposition to the proposed changes as well. So with a quick yes or no, does anyone believe now it is the time to weaken housing discrimination rules? Ms. Cohen, let's start with you.
No.
Ms. Griffin?
No.
Mr. Williams?
No. No.
And Mr. DeMarco?
No, we don't want to weaken housing discrimination.
Thank you. Ms. Cohen, while the FHA has provided some guidance to FHA services regarding the implementation of the CARES Act, related to the forbearance, a recent HUD OIG report found that, and I quote, FHA servicer websites representing about 90% of FHA loans provided incomplete, inconsistent, dated, and unclear guidance to borrowers. Do you think further guidance from the FHA to servicers regarding forbearance is needed?
Yes, FHA should provide further guidance, and so should Congress include it in the next package. both about websites, written notice, and oral notice.
And why do you think the FHA hasn't issued such guidance?
I can't answer why FHA has not done that. I will say that I agree with Dr. DeMarco that they've done a really incredible job of putting out a lot of guidance, and they just put out a lot of new rules, which hopefully will make loss mitigation more affordable for more people.
Thank you. Ms. Griffin, what is your organization seeing in terms of servicer communications to borrowers about having to pay a lump sum payment at the end of the forbearance period? Do you feel misinformation about repayment options is discouraging borrowers from accessing the forbearance relief afforded to them under the CARES Act?
Absolutely. Absolutely. The people that we talk to are frazzled about this lump sum payment. Few of them have actually even heard of the 180 days, let alone a year. So, it's causing a lot of undue headache in these communities. And the borrowers are really concerned about their ability to pay even at some point. Let alone after 90 days, they are concerned that when they're going to work. And yes, the question earlier, yes, when employment increases, things will be a little bit better. But right now, these homeowners are frazzled.
Thank you.
Despite everything with the servicer,
Thank you.
they're not getting the right information.
Thank you, Ms. Griffin. Yes, Mr. Donnell?
Just to dovetail on what Marcia said, that we basically need more awareness. The borrowers need to know that they're right to protect. We need to promote on TV, on radio, and even email. They need to know they're protected because it's folklore right now.
So whose responsibility it is to get information out? Who is failing?
The services in the government right now, we're spending a lot of money, as we said on our statement, a lot of money on COVID-19.
Mr. Williams, many individuals with mortgages currently in forbearance might still be unable to make their payments when their forbearance protections under the CARES Act expire. Based on what you have seen over the past few months, are you concerned about services' ability to work with borrowers to keep them in their homes after their forbearance period ends?
I am very concerned. I'm very concerned. I have two witnesses, two people that I know that said that one servicer said that they didn't work with the program at all. This is a very well-known service. That's what they told this lady. They didn't work with it at all. They would not be able to. Another servicer gave the borrower 90 days, 3 months, and they have a payment of $17,000 at the end of that. So
Thank you.
I'm extremely concerned.
My time has expired. Thank you, Mr.
The
Chairman.
gentlelady's time has expired. The chair will now recognize Mr. Timmons for 5 minutes for questions.
Thank you, Mr. Chairman. It's good to be with you all, even if it is on a conference video. I appreciate you having this hearing. We need to get this right. Just in January, February, we are experiencing some of the lowest unemployment in the history of South Carolina and the history of our country. And COVID-19 has just changed everything. So the federal government did what it could. The CARES Act had a lot of great things. It was hurriedly put together, and I think overwhelmingly it was in the right direction. We're going to make sure we get the next package right. Phase 4 needs to be tailored to those that need it, and people that are still struggling from unemployment or with other economic challenges, we need to make sure that we get them the help that they need. We're expecting a vaccine here December, January, February, March, April, sooner the better, in my opinion. I'm sure we'll all agree on that. I'm probably going to be one of the first people to get it because I'm in the National Guard. So I hope they get it right the first time. Mr. DeMarco, I'm concerned that in October, November, we're going to hit our 6 months and we're going to have a lot of people that are still unemployed that are going to to have challenges making their payments. What policies do you think we should be considering to address that?
Well, for those in federally backed mortgages, which is the majority of homeowners, they get to 6 months and they still are experiencing an economic hardship because of this pandemic, then they should be in touch with their servicer and requesting an additional extension of their forbearance period. So in that sense, the answer is already there. The larger question is getting people back to work and balancing and dealing with both the health issues our country's facing as well as the need to get the economy going.
We're dealing with that exact issue here in South Carolina. And, the issue is if you are older or have an underlying health condition, we need you to protect yourself, and we need to make sure that you are able to protect yourself. You're not worried about having to have your credit ruined or, risk your safety going back to work. But if you're healthy and you have a lower risk factor, we need you to get back to work, because ultimately getting the economy restarted and getting the vaccine is what's going to get us through this.
Mr. Timmons?
Yes, ma'am.
I just wanted to supplement what Mr. DeMarco said. We do want to see people get back to work when it's time to do that and they're healthy. But 1/3 of the mortgage market is not government-backed loans. And so we want to make sure that those people can get affordable loan modifications if they need them after their forbearances, so that we can see increased employment and decreased foreclosure, including in the upstate where you live.
Yes, ma'am. I appreciate that. Honestly, it was remarkable to me. I had so many businesses and, I had so many individuals calling and talking about this issue. We're discussing of a balloon payment at the end of the forbearance period. And I had a call with the bankers and the credit unions immediately the next day. And I just wanted to make sure that that was not going to be the case anywhere. Obviously, it's unacceptable. And I think the adverse impact on the perception of any entity that is not providing the forbearance necessary to those that need it is sufficient. The PR hit would be not worth the rub. But on to a different subject. As you all know, the FHFA and the GSEs have adopted temporary origination policies for the largely remote and virtual environment we find ourselves in. This has applied to appraisals, underwriting, and remote online notarization. This has been hugely helpful, in my opinion, to help maintain the health of the housing market during the pandemic. I'd like to ask each of you, yes or no, do you think these remote policies, which are set to expire August 31st, should be made permanent? I'll start with Dr. DeMarco.
These policies have certainly helped keep the mortgage market going. And yes, in one form or another, we'd like to see some of these, certainly things like the remote online notarization, be made permanent.
Mr. Williams.
I believe some of those programs, some of those options should be made available and be made permanent.
Thank you. Ms. Griffin? I'll go to Ms. Cohen.
Yes, we think those are important programs, but we need to make sure they're only used in certain circumstances, and we need to make sure that appraisals are still reasonably accurate.
Absolutely. I think we can agree to that. Mr. Chairman, again, thank you for having this hearing, and I look forward to working with you on this issue. So with that, I yield back.
The gentleman yields back. The chair recognizes the gentleman, Mr. Perlmutter, for 5 minutes for questions.
Thank you, Mr. Chair. And I have to say, I subscribe to much of what Mr. Timmons had to say, and pretty realistic view of what we're facing in the questions that he asked. And I had taken some, not offense, but I differed with Mr. Barr as he started off his remarks and saying this economic situation we're in is as a result of a government mandated shutdown. I mean, the bottom line is this is COVID related and we don't have it under control. This thing is going to continue to evolve. It's going to be difficult, and we don't know how many different ways. And as Mr. Timmons was saying, and I think all of us believe, each of us has to provide some kind of latitude to others for all of us to get through this thing. So, 37 states in this past week have seen increased numbers of infections and hospitalizations. We're not out of this by any stretch of the imagination. And I think that the housing industry, the mortgage industry are going to continue to be roiled by this for some time. So I think this is going to evolve. I would ask Ms. Griffin and Mr. DeMarco, there are provisions in the HEROES Act that contemplate the fact that we're not out of this virus yet. And that at the end of this month, the pandemic unemployment insurance runs out. We see a lot of the funding for the PPP loans will have been exhausted by individual businesses. We haven't done another stimulus or stability payment. If this virus continues to roll as it has, and I'll start with you, Ms. Griffin, I mean, are we going to need to implement some things in the HEROES Act so people can pay their mortgages? Forget about forbearance for a second. I think we'd all like them to pay their mortgages.
Absolutely. You know, the reality is that the more help we can give to homeowners, the better. They're going to absolutely need it. As you just said, the situation is not getting better. It's getting worse. Certainly consideration to helping homeowners, helping organizations like ours and others that can help these homeowners get on their feet and work with these servicers. This is really critical. These guys really do not have, our homeowners do not have, many of them at least don't have a grasp for what's next. And so the work, and I'll just certainly say with the counseling organizations, that we can do to just kind of settle people down, give them direction, even help to provide advice and guidance about working with the servicer, as well as how to enhance their own lives. This is what we want, and we certainly need to think about a HAMP-like program that was very effective the last time. I think that this will be very effective going forward, and this is something that we would really, really encourage.
And I thank you for that. I'll turn to you quickly, Mr. DeMarco, but Ms. Griffin, I think you hit it on the nail on the head. When you have uncertainty and you have fear in an economy, it slows the economy down. No ifs, ands, or buts. There needs to be some level of certainty, and to try, hopefully get a vaccine as soon as we can, or make some technological breakthroughs in therapeutics to take away the fear. But Dr. DeMarco, what do you think we're going to need, assuming that this virus isn't extinguished or isn't fought off by a vaccine for 5, 6, 7 months?
Right. Well, Mr. Perlmutter, I mean, I think I agree, right? This is a big picture question about our economy. It's about small businesses, even large businesses that are suffering because of how the pandemic intersects with those industries and those businesses. It is causing great hardship among families because of the furloughs and the unemployment that is resulting from that. So this is a big macroeconomic challenge, and that's a bit outside of my scope, but I would say I understand Federal Reserve Chairman Powell has been up before Congress recently and been talking about the need for continued fiscal support in face of how the pandemic and the economic response to it is affecting our economy, our businesses, and our workers. And so I don't have a particular prescription, but to say that I think Mr. Powell, Chairman Powell, certainly identified that as a role for Congress.
And I thank you, and I yield back to the chair.
Gentleman's time has expired. The chair now recognizes the gentleman, Mr. Taylor, for 5 minutes for questions.
Thank you, Mr. Chairman. Appreciate this hearing. I think this is a very important topic, and I think we've been talking a lot about the individual impact, and I think all of us as members of Congress see that every day in our district. I know I was at a food bank this morning in Allen, Texas, and just watching, the real need in our communities is deeply affected me. I want to take a second and kind of step back and talk about the macro for a second, talk about the big picture. So right now, about 8% of the home mortgages in the United States, according to the data I've seen, are currently in forbearance. And so that would, and just thinking about what that could mean if there wasn't forbearance. So let's just kind of take that for a second and say if there wasn't forbearance, my guess is that would mean about 8% of the homes in the United States would be foreclosed within the next year. And then when the foreclosure goes to sell those or liquidate those, it would basically collapse the real estate market. So home values would collapse across the country because you have a tremendous amount of foreclosures and then liquidations. And I'm saying that based on the experience that Dallas, Texas went through, and Texas as a state during the 80s. I remember the savings and loan crisis, and you watch a tremendous number of foreclosures with the Resolution Trust Corporation, or what are referred to as the RTC days in Texas in the 80s and early 90s. And the liquidations were such that things were literally, I mean, office buildings trading for $10 a square foot. People that could take retail properties literally for paying the taxes. So I just wanted to know if anybody have any thoughts about what if we didn't have forbearance? How bad would it be for the housing market in this country on the valuation side in 12 or 24 months once you had a bunch of liquidations and then collapses in values? Mr. DeMarco, do you want to speak to that?
Well, Congressman, it certainly would be bad. I mean, I don't know how to size it any differently than you just did. It would be bad. It would also, I mean, one of the things that forbearance has accomplished is it has assisted in the response to the health crisis by allowing people to be able to stay home to quarantine or whatever the particular standard is in a community to help suppress the virus. It's helping combat the virus, recognizing we're providing economic support to that household or to those workers because they're not going to be able to pay their mortgage. So there's not just the economic toll and what happens in the real estate market, there's also the question of the health impact. If we create an incentive where people feel they've got to go back to work, even if that's not coinciding with good health practices in this environment.
Sure. Mr. Williams, do you want to talk about what we're trying to stop from happening here?
I do. It would be horrific. It would be horrific. But what happened to, when I went to school, they taught me the three important necessities in life were food, clothing, and shelter. So how do we get to bailing out the airline industry before we look out for the homeowner? So I just feel that if we don't do something, if we don't act, we don't get everyone involved and get on the same page with the program, if we don't move quickly, then we're going to be in for a huge, huge problem.
Absolutely. If I could add to that, without, well, first of all, the forbearances have provided a profound help to homeowners. Without it, we would be inundated with foreclosures, where there's a possibility we're headed towards that, and we certainly need to work together. But without question, for people of color, for these vulnerable communities, without the forbearances, without the work that we're doing together, there would be a whole nother generation of wealth, of loss of wealth. It's bad now. It appears to get worse, and hopefully we can sort of work together to stem this tide.
Ms. Cohen, do you want to make any comment on, again, the macro situation? It seems like there's consensus that we're avoiding a macro catastrophe by trying to use forbearance as a mechanism to get to the other side.
I agree with that, Mr. Taylor. I think what we should also keep in mind in this macro situation is who isn't making their payments and doesn't have a forbearance, and what is that going to do to the economy and to property values as well? And how can we collect enough data that we understand what's going on so we can prevent a catastrophe?
Sure. And in my final few seconds, I'll just point out that I'm working with a lot of members on this committee on both sides to try to work on forbearance or trying to help in the commercial real estate space, because we have done a great job. And this we've heard that on the home side, much work to do, but see, we're headed in the right direction. But in commercial real estate, I'm very deeply concerned that we're about to have a foreclosure catastrophe. Yield back, Mr. Chairman. Thank you for indulgence.
Gentleman's time has expired. The chair now recognizes the gentlelady, Ms. Tlaib, for 5 minutes for questions.
Thank you so much, Chairman, and thank you so much for this really critically important hearing. I know Chairman Al Green has come to my district and actually did a tour of housing justice tour and saw that even in the last recession, just how much our communities are still suffering. So many of my residents, especially throughout Wayne County, have been on survivor mode. They have been living check by check. It's just alone in one of my cities, in the city of Detroit, 88,000 people were evicted out of their homes. So for this to happen, a pandemic that is not in control of any of us, right? I mean, this is very much something that came about that I don't think any of us could have truly been able to truly prepare for, especially in the housing mechanism. I don't know about the healthcare, but especially with housing. So I want to talk about this. I think this is really critically important. And I think my colleague, Mr. Taylor, was talking about that. You know, forbearance and these kinds of moratoriums on water shutoff, utilities, student loans, mortgages, they're just Band-Aids because all that money is going to be due when the forbearance is up. So what are we going to do then? And so I want to possibly start with, Mr. Williams. You know, from many of your clients and even in your membership, I mean, are they, because what I hear from my residents is, why aren't we doing recurring payments? Why aren't we doing something as aggressive and bold that we are doing for, airlines and other industry? Why aren't we having a people's bailout where we are looking at reoccurring payments so that people can pay all this debt down? Because again, some of these jobs won't come back, but even if the jobs come back, they're not going to have that lump sum ready to grow to be able to pay off. They still might end up losing their homes. Can you talk a little bit about that?
Sure. That's why you're absolutely right. But that's why we asked for that 5-point plan. We asked for we had some serious solutions that we want you all to really seriously take a look at, because that's the direction we feel we should go in. I mean, we've been decimated. I mean, it's critical time. It's time for action. It's really time for that.
No, and I appreciate you bringing up my Black neighbors, because we lost more Black homeownership in Michigan than any other state, about 40%. So Attorney Cohen, you've been very thoughtful in how you talked about these issues and the fact that we still are leaving a lot of our neighbors across the country, homeowners, behind in the way we're approaching this. I don't know if you're familiar with the Automatic Boost to Communities Act that I introduced, but it would be reoccurring payments of $2,000 per month on a recharged debit card. Do you think that will help with some of the issues we're seeing with people possibly losing their home because of this pandemic?
Thank you for your question, Ms. Tlaib. I'm not familiar with it because I live in my little universe of housing legislation, and I can talk to my colleagues about it. But the biggest problem with financially strapped people is that they're financially strapped. And so they're living on the edge and they need cash in addition to needing help from their servicers and from all their other creditors. And so anything we can do to do that will move things in the right direction. People should also look closely at legislation around that homeowners assistance fund, because states can also administer programs to hit the hardest hit areas in ways that might be constructive.
And
Congresswoman, getting the word out so that the homeowner or the borrower is knowledgeable enough about the program. This could be the same. This has the same effect as the PPP, where huge companies got all this money and then we didn't get it because we weren't.
Well, Mr. Williams, let's talk. I mean, even with the PPP, and my incredible colleague, Ms. Velasquez, has been so much on the line, bringing the voices of small businesses. But it's so encumbersome. But also, let's be honest, the servicers are playing games with people's lives. Some of them, if you're not actually saying the correct word, if you're not requested it a certain way, I mean, a member of Congress, myself, and I know I'm new, but I have to pick up the phone and call a servicer and say, why did you tell my resident they don't qualify when, according to the legislation we passed, they do qualify? Well, they need to say it this way. This is not a game. They obviously can't pay. So let's put that as an option and stop playing games with people that really, I mean, they're going to lose their home. They're obviously, these are not people that are like, I want to lose my home. Hey, they just don't have the capability of doing it. And I'm tired of people pretending that it's because of economic shutdown or all these other, we did this to them. We put them on survivor mode. They've been literally one emergency away, and now the pandemic has happened, but they were one emergency away from going into poverty. So I think it's our responsibility to put people first. But I thank all of you so much. But I think we really need to talk about it and we talk about this program, and of course we need all those programs in the 5 points, but we need reoccurring payments. Enough. Other countries are doing that. They're giving people human dignity. Let them choose what they need is for their family. And recurring payments, I think, is going to be key here. Thank you so much, Chairman Green. Always a pleasure to work with you. Thank you, and I yield.
Gentlelady yields. The chair now recognizes the gentle lady, Ms. Dean, for 5 minutes.
Thank you, Mr. Chairman. Can you hear me?
I can.
I thank you, Mr. Chairman, for calling this important committee meeting. I thank Chairwoman Waters as well. I thank the ranking member, Mr. Barr, and Mr. Barr, you and your family are in my prayers and you have my sympathies on your recent loss, grievous loss. I'm really pleased to be here to talk about this and know that the lens that I am looking through what we're talking about here in terms of folks and their mortgages in precarious places is one from what lessons did we learn from the past? What did we learn from 2008? I was not in Congress then. Like Representative Tlaib, I am a freshman. But as Representative Von Taylor talked about, we have 4 million mortgage loans in forbearance. As our testifiers have told us, many people are not in forbearance and are missing payments. So we've got a gaping hole there. We put together information and important protections through the CARES Act, and we want to do even more through the HEROES Act. We need to get people the protection they need to keep the roof over their head, to protect their credit, protect their family. Mr. Williams, I'd like to start with you. You've begun to already talk about this, but you're concerned about what mortgage servicers are and are not doing to protect borrowers in terms of whether it's communication or reaching out when a payment is missed to find out what's going on to see if actually they should be put into the forbearance. What other things do you think need to be done in order to get protection, forbearance to as many borrowers as possible?
Well, I think that we need to have some communication going out from the service. They need to put it in their mailings, emails. Hey, there should be a commercial on television. I mean, getting this information out. I think that we hinder ourselves. I think that they're limited in giving information because the servicers lack diversity as well. So those are the important things I think right off the bat that we need to increase our communication to the borrower.
Absolutely.
And
Thank you. Ms.
I'd
Cohen?
like to add in there also that, and complement, the outreach is critical. What we have found from the past foreclosure crisis was that people they really need some guidance, they really need some help. And even if the servicers send out information, it needs to be clear, it needs to be simple, and without question, we really need to have some advocates in the mix that can be able to explain things to these borrowers who, as you said, Congresswoman, they are on the edge and really just need some guidance. So the outreach is certainly critical, and the hand-holding is also critical.
I appreciate that.
Ms. Dean, can I just say one other thing? I agree with Mr. Williams and Ms. Griffin, but the servicers don't have the capacity to do the level of default servicing that we're going to see. They didn't do it well in the last crisis. They're not doing it well now. It's great if you can get onto a website and you don't need much from them. But if you actually need something from them, it's more complicated. So we can't put the onus just on the homeowner to understand and reach out. We need automated systems, and we need to make sure that people are offered what they need without having to go through a lot of red tape.
Well, Ms. Cohen, that's a perfect segue. I wanted to ask you next. What are the lessons that we learned in the past that I hope we desperately do not repeat in this economic collapse? What are some of those lessons?
Thank you for the question. The first one is people need affordable options when they can't pay their regular mortgage payment. That is one of the good things that came out of the last crisis, was a general understanding about that. But we don't know whether the programs we have now will be affordable. Second, when you have a crisis in Black and Latinx homeownership that's been exacerbated by the current crisis, you need to look freshly at what the problems are and what the solutions are, and to ask yourself whether we need to start something new.
Well, let me ask you in my final seconds here. You talked earlier in your testimony about the CFPB and what that they need to help people avoid foreclosure. What is the responsibility of the CFPB? What could they be doing proactively? Because we see the number of complaints just going through the roof with CFPB. What should they be doing to help people avoid foreclosure?
I have a pretty long list in my testimony, but let me give you two. One is work with the Federal Housing Finance Agency on the Borrower Protection Program, provide transparent data, learn from the consumer complaints, and take action against companies that are misbehaving. Second, right now, they have an interim final rule that they put out. They need to protect people against foreclosure, which they haven't done. Thank you.
Thank you. I know my time has expired. Thank you, Mr. Chairman.
The gentlelady's time has expired. The chair now recognizes himself for 5 minutes. I will tell you, friends, I was here in 2008, and I saw how we treated the big banks. The truth is this: they were overpaid. Overpaid in this sense. There were banks that said, we don't want that money. We don't want it to appear as though we need the money. But we imposed upon them billions of dollars. They were overpaid. But when it comes to the consumer gets shortchanged. The consumer has to jump through all kinds of hoops to try to get what Congress intended consumers to receive. So I'm just appalled, to be quite frank with you, at the fact that the consumer always seems to find himself or herself groveling to a certain extent to get something that these big banks get as a matter of course. I'm not opposed to big banks. I just want everybody to be treated fairly. This program, in my opinion, has no consequences. If the servicers misbehaved, there are no consequences. It seems to me that we in the future will have to find a way to impose some consequences. My constituents who have actually received this notice that is according them 3 months of forbearance when they're entitled to 180 days, they now have to hire a lawyer if they want to pursue this. They can't get it done simply because they have made a fair and just request. They will have to go through some other extenuating circumstances. I would like to note that this would be submitted into the record without objection. I would also call to your attention this. It always seems that people of color are having to account for themselves. We have to prove that people of color are being discriminated against. And this is not just as it relates to the financial services industry, it's across the board. People of color always seem to be at the bottom. At some point, we have to have the system adjusted such that people of color will get the same treatment as other persons in this society. I think that what happened to George Floyd is exposing the underbelly of what's happening to people of color, and other people are starting to realize that it will take more than our hues and cries to get this done. It's my belief that there is systemic discrimination. Let me go to you, Mr. Williams, if I may please, sir. Do you agree that there is systemic discrimination taking place in lending?
I do. I totally agree. I see it often. We have some resolutions. I mean, there needs to be no better time like now that we need to address the Black home ownership program.
Let me do this. Time is of the essence. Ms. Griffin, do you agree that there is systemic discrimination in lending?
Yes, there is.
And let me go next to Ms. Cohen. Do you agree that there's systemic discrimination in lending?
Yes, I agree. The CFPB found that for people with the same credit scores, Black borrowers were rejected for mortgages at higher rates.
And Mr. DeMarco, do you agree?
I agree that we have certainly had a history of this, and there seems to still be areas where it's an issue. Yes, sir.
Well, if you agree that there is this systemic discrimination, I have proposed that we have a Department of Reconciliation with the responsibility of dealing with racism and invidious discrimination in this country. And it would deal with financial services, it goes into policing, and many other areas. If you agree that we have this problem, and we've had it for hundreds of years, isn't it about time that we do something other than what we have been doing? Would you agree, Mr. Williams, that it would be appropriate to have a Department of Reconciliation who has as its responsibility to look out for people who are being discriminated against? And this would include the protected classes. Look out for them, report to the president, a Secretary of Reconciliation. Would you agree that
Yes,
such a position should exist, sir?
Yes, sir. I agree wholeheartedly.
Ms. Cohen, where do you stand, please?
Yes, we think that's important, and we think it's important to change
Let me
the
move on.
systems overall.
My time is of the essence. I'm so sorry, Ms. Cohen. Ms. Griffin, where do you stand, please?
I fully agree, and it needs to be monitored, and there needs to be penalties.
And Mr. DeMarco?
I have no opinion on a position like that, Congressman. I do believe we all have a responsibility to act.
Well, let me do this now that you've said this, Mr. DeMarco. All persons who are in agreement and you think that systemic racism and invidious discrimination as it relates to people, including the classes, should be handled with a department that specializes in this, kindly raise your hand, please. Raise your hand so that we may capture all on screen. Okay, I see everyone's hand saving Mr. DeMarco. Would you do a screenshot of this, please, staff? Thank you. Thank you, friends. You may lower your hands. My time has expired. I would like to also include for the record a statement from the Mortgage Bankers Association without objection. Without objection is included in the record. Friends, if I may now bring this to closure, I thank all of you for appearing today, especially the witnesses. And thank you for your testimony and for devoting your time and resources to share your expertise with the subcommittee. Your testimony today has helped to advance the important work of this subcommittee and the U.S. Congress. The chair notes that some members may have additional questions for this panel, which they may wish to submit in writing. Without objection, the hearing record will remain open for 5 legislative days for members to submit written questions to these witnesses and to place their responses in the record. Also, without objection, members will have 5 legislative days to submit extraneous materials to the chair for inclusion in the record. I remind members to submit written questions and materials for the record to the email address provided to your staff. This hearing is now adjourned.